Home prices could reach peak levels again by the end of next year, meaning the end of 2025, which is like 18 months away. That's what CMHC says. So I'm going to break it all down for you on this week's reaction video at the Prime Property channel. Now, if you're looking for some help on how to navigate this real estate market in 2024, which is right now, and in spring market, you can book a call with me using a link that's on the screen. It's right here. It's www.chatwithzen.com.
Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then.
Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen. If you're enjoying the content I'm putting out there, do me a favor and like and subscribe. So the article we'll be reviewing today is from the Globe and Mail, which is from a CMHC report that says home prices could reach peak levels by next year in 2025 and set new highs in 2026. Dun, dun, dun. Do we believe it? Yeah, we'll see. So right now, that's kind of what they're saying, even though prices were peaked at 2022, which is I would say February and March. And just so you guys are aware, the average price was like $1.3 million in the GTA, right? So this includes your condos and your freeholds and everything all together. So $1.3 million. Right now, it's 1.12. So we're off by like $180,000 from the peak. So just keep those numbers in mind as we go through this. So what they're saying is because of the lower interest rates and continued government support, which I agree, a lot of things are being backstopped by the government, and policies encouraging greater density in the urban cores, we should project that 2025, 2026 prices are going to get better. But as declining mortgage rates and the country's strongest population growth since 1950s will likely spur a rebound in the home sales and prices. So I'm not sure when CMHC did this report, because obviously the Liberals just came out and said they're reducing the population growth, right? So I'll probably talk more about that on Thursday's video, but they're going to reduce it quite drastically if they follow their proposal, but we'll talk about that later, right? So right here, this says, as mortgage rates and economic uncertainty decrease in the second half of 2024, they expect that buyers to start returning to the market. And look, that's like normal, right? Because I would say a lot of people were on the sidelines and they've been kind of waiting for, more certainty on it. And we saw a lot of people try to front run the interest rate hike. I was saying last week that, people were buying a lot of properties where there's not inventory and the prices were going up a little bit in January, February. But now that we have more inventory and the economic uncertainty is kind of back out there, going from 5 rate cuts to 3 rate cuts, I think people want to see that actual rate cut before they do anything. Now, the flip side of that is how many of those buyers are there relative to the amount of sellers waiting for that rate cut to happen, right? Like, I can tell you from speaking to a couple of people who've called me, I want to say it's like a prevailing thought, but a lot of people that are trying to sell their property, maybe can't keep it anymore, thinks that the minute you have a rate cut is going to spur the prices back into the peak pricing of like $1.3 million. And I just don't think so, right? Because I've talked a lot about this before, right? Like your rate cut is determining your variable rate, right? Like the fixed rate is forward looking because of the bond market, and it's already in the 5s right now, sometimes 4.99. Your variable is at 6.5. So even if you cut the variable rate by, call it 25 basis points on the first one, you bring your variable from 6.5 to like 6.25. So it may give some relief for people with variable mortgages, but not enough. And it doesn't change what the buyers are doing with their mortgages. It's the same rate. So my question, and trying to go against the grain, is how many sellers are we going to get to come on the market once they got that rate cut? Just from the calls I'm taking, I feel like there's going to be a lot. So something to consider. I don't think anyone's talking about that right now. Now, CMHC also predicts that sales activities from 2025 and 2026 will surpass the 10-year average. Sure, that's fine. I'm not concerned. The last year was like 65,000 sales in GTA, which was like a 22-year low, which is absolutely bonkers. And the year before that was also pretty bad. I think this year we're probably projected to maybe like 70, 80,000, at least in the current trajectory. The 10-year average has been like 90,000 with like the craziness in 2021 and 2017 breaking 6 figures. So to get back to the 10-year average and 90,000, we're seeing maybe like 20, 30% increase in sales, which is fine. Just goes back to the normal, right? So nothing to worry about, nothing to be concerned. It's more so, I think everyone's concerned about price, right? So with that article out of the way, I'm going to go through the actual CMHC report, specifically talking about Toronto, right? So the first one talking about how housing starts are going to decline through 2025, led by the apartment segment. And this is mainly because of heightened mortgage rates and escalating costs of materials and labor, and financing is expected to result in fewer projects in 2024 and 2025. Now, there's a lot of ways to kind of like process this. Like housing starts just mean that a lot of things haven't like started construction, right? So I would say that because we got a shock in 2022, like late 2022 and 2023, a lot of people weren't penciling to build these things. But because CMHC has this crazy 50-year amortization and like below market rate for rentals, I actually think there's a lot of supply coming online in the apartment space. Maybe construction will start in 2025, 2026, but a lot of these apartment buildings make a lot of sense right now, especially because the federal government just removed the HST component, which make a lot of these projects viable. And it's made a lot of these pre-construction condos that aren't selling, maybe they turn it into rentals and the numbers work better in that sense, right? So it really, I think, more so in this little segment that's highlighted, depends on the timeline, right? I do think there's a lot of supply coming online. I'll put it over here. There's a ton of apartments and condos coming online. So housing starts for apartment buildings, I'm not too concerned. Really am not. Yeah. Now, the expected slight increase in ground-oriented housing starts. So these are your freehold homes. It could be like stacked condo towns, 2 or 3 floors, or like, your back-to-back towns, and obviously your detaches, right? So among the newly developed ground-oriented dwellings, potential buyers are likely to favor semi-detached and row homes due to their more affordable price points, which makes total sense because like you can't really get away with a detached in like, call it the Toronto area, the York region for more like less than like 1.5 right now. It's a little bit lower in Peel and like the Durham region, but yeah, it's pretty expensive, right? So a lot of people are gravitating towards like ground-based homes to raise a family, right? I've been talking about this for like I think like half a year, if not more. And, that's more affordable, and they just need that 3-bedroom, 3 kind of washroom kind of style home with like, a garage and a backyard, right? Now, here's where we get to the juicy parts. Resuming growth in the average MLS price in 2024. So they're saying that they're anticipating a rebound in 2024. Now, I don't know what rebound means if they're talking about prices. Maybe it's just heading in the other direction, because if we talk about the year, last year the prices dropped 5% at the end of the year or something like that. So rebound meaning it goes up. Cool, sure, that makes total sense. Like we rebound from the first month or two already, right? But you just got to keep in mind in like say the next few months, because we had that little bump up from Silicon Valley Bank collapsing and no inventory, and like prices ran up like 10% last year in this time. We're probably going to see like year-over-year decreases in average price for the next few months, right? So this may not like be the right assumption, but I do agree that at the end of the year, probably prices will be higher than what they were last year, right? And they're expected growth to be past 2025 and 2026, right? And this is where it's very interesting. And I totally agree with CMHC on this front because I've kind of been preaching, right? So it says condo apartments prevalent in the city of Toronto and its downtown core are expected to experience balanced market conditions and subdued growth. So keep in mind, right? A lot of people want to own freehold homes. We're getting a ton of condos coming online. So a balanced market puts you into like 4 months of inventory. I would say for Toronto, it's like 3 to 5, right? Because we've seen prices go down with the 3 months of inventory. So right now we're at like 3.5 to 4 in the condo space right now. So again, spot on, right on the dot. But that segment of the market is going to behave totally different from the freehold space, especially like we're talking about here, where people want their affordable ground-based homes being the townhomes and the semi-detaches, right? That stuff is still pretty much rocking and rolling right now, and a lot of people are still bidding on these, whereas it's kind of like cold in the condo space. Now, furthering to the condo side and why it'll have problems is one, investors facing challenge with cash flow negative properties caused by higher mortgages since 2022, leading in part to a recent increase in condominium listings. So with rate cuts, again, like I was telling you earlier, if you had a variable 6.5, even if a rate cut comes, you go 6.25, it's not going to save you if you're minus $1,000 in cash flow negative, right? This is why I think there's going to be a lot of people coming on the market, especially when we hit the mortgage renewal. Because what's happening is if you aren't at like say Scotia or National Bank or like quasi RBC, the monthly payment hasn't gone up. You're just negative amortizing with the other banks. So it hasn't affected the cash flow yet. But once you renew coming up in like this year, 2025 and 2026, right? I think that's when we're going to see a lot of investors like, oh crap, I can't renew at these new rates. I can't hold it anymore. So they'll probably sell it. And there may be some underwater, maybe some just break even depending on when they bought the property, right? So I expect there will be a lot of investors in that sense coming to the market relative to like the entire market. and you got a substantial number of condominium project completions, right? So we're getting that delayed 2017, 2018 pre-construction sales coming to close, and we'll probably start getting that 2020 and 2021 closings for like the shorter buildings, right? In 2025, like late 2025 and 2026, right? So there could be a lot of stuff coming on the market, quite a bit, all right? Now here we go. Conversely, ground-oriented housing types are poised to propel the growth in the average MLS price. Ding, ding, ding. Talked about it, right? Households seeking more living space, notably millennials with young families. Well, I've been saying for a long time, right? It's the, hey, the millennials got cooped up during the pandemic and all had kids, and these kids are now running around kind of families. They need more space, right? And you combine that with the limited supply of such homes, resulting in new construction activities over the year, will maintain a tight market condition within the freehold space. Bang on. 100% agree with CMHC. So again, depending on what you're trying to do, you really have to know the market and how it's behaving, because you can't blanket something, because obviously buying condos is a lot easier than buying a freehold home right now. Then you got to talk about if you're selling one to get to the other, whether you're upsizing or downsizing, the market is totally different. And then when you insert the area you want to be into, just a whole different ballgame, right? So like there's no such thing as like even I would say a GTA market anymore. It's very segmented depending on what you're trying to do. Now here we have, again, I'll talk more about this on Thursday, but rental markets will remain tight. I disagree with them. I think we're gonna have some temporary problems in the next few months, but it'll be fine in like maybe 2025, 2026. But we have a population reduction and a bunch of condo supply. It's not looking good right now. And here we have the charts of the CMHC forecast. So if we look over here, again, as I was saying, we're ending in $1.120 million. So they got a low side and a high side. So let's go into the 2026 forecast, right? If you look at the low forecast, you're at 1.160. So that's like a $40,000 increase in 2.5 years in the average price. Again, this is the low conservative side. That's like a 3 or 4% increase. That's not much. That's like 2% a year, call it, which is well below the 7-8%. Now, is there a chance we hit that? I would say, like, I'm not super bearish, but I think there's a chance, because this entire report doesn't factor in one big thing that I see as a huge glaring problem that I've been watching out for: a potential recession. None of these things have thought about what the heck is going to happen if we hit a pretty hard landing. It just all assumes that we have a soft landing. So again, if we have a soft landing, maybe we'll get closer to the high side, but if we have a hard landing, I think it's going to set us back for a little bit, especially depending on the amount of job losses, right? But again, I could be very surprised, and we may have another K-shaped recovery where like some people who don't lose their job and the massive rate cuts come because of a hard recession. Maybe they get in the real estate market, right? Who knows? We're going to find out if we get a hard recession. Now, on the high side, we go back to the 1.4 million. Remember what I was saying, the peak prices was 1.3 million. So if we go to the high forecast of CMHC, it's about like a 25% increase in price, which is like more than, like 12% a year, which seems awfully high to me, a little bit steep, right? So yeah, I don't know. I want to believe that, right? So like, let's just say somewhere in between. So like maybe at the end of 2026, we're back into like the, call it 2022 pricing, which is like 6 or 7%. That probably sounds a little bit more reasonable. But again, no one really knows what's going on, because you have that potential recession looming, and we have so many different things coming, not to mention like this is smackdown between basically elections. So yeah, I wouldn't use this as a forecast of personally what to do, obviously, with your, everyone's unique situation. And I would also say that do keep in mind, CMHC was the agency that thought that during the pandemic, prices would come down 18%. So yeah, credibility still not that high. The last report was like somewhat better, but not the highest accuracy. So just, take that with a grain of salt. Now, after seeing all this, if you are concerned about what to do with your properties, whether it's your home or your investment property, whether you're bearish because you think it's going to go on the low side, or you're optimistic on the high side and kind of how to survive until the high side so you can make money or break even, you could book a call with me to talk about your unique situation, and you can do so by using the link right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one or this one? You know what? Just watch them both.